Greetings. Welcome to my Welcome to my weekend market recap, 16th July 2022. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use Q systems for my trading. They run on Metastock, and the technical analysis part runs on TradeStation also. These are the different components. That was the last slide. Let's go through the global markets first, as usual, starting with Australian index, all ordinaries. In the weekly chart, after dropping sharply, price has stabilized. The backdrop color turned yellow 1 week ago. That time it also displayed a bull release signal, and the yellow color is continuing. This week's candle shape is indecisive. So if I remove the drawings now, shape and color both are indecisive in weekly. What about daily? Daily had this sharp drop here. When it hit the jump thrust low at price extreme low, then it recovered somewhat, as we would expect from such hugely oversold condition. However, it is still in a downtrend, and there is a trend line resistance nearby, another one not very far. Friday's candle shape is indecisive, color is bearish. Looking at that, I am not going to take any long trade. When will I consider taking longs again? If I see these two trend line resistances are broken. Am I going to take short now? No, because Friday's candle shape is indecisive. If I have a bearish shape candle now, that will come too close to the watermark resistance. Sorry, not resistance, watermark support, and also the lower boundary level. That will be too late to short. So I will neither take any long nor any short in the Australian market right now. Japan Stopics. The trend lines worked beautifully once again. When price came to the weekly trend line support, I mentioned we could take long trades at that time, and in the last market roundup I mentioned that price was too close to the weekly trendline resistance. It precisely hit the trendline resistance and came down. It hit the trendline resistance on this day, and since then price has come down. We could consider taking some short trades, not in the topics index but individual stocks, weak fundamental stocks in weak industries, right on this day when price was reversing down from trendline resistance in the weekly chart. Now it is right in the middle of a triangle pattern in weekly. That's the no trading zone. Also the daily Friday's candle color and shape both are indecisive. So topics also, I'll not take any directional trade right now. So Australia market, no trade. Japan market, no trade. What about CSI 300? And we'll once again see the power of these automatically drawn smart trend lines. Price came very close to this weekly trend line resistance. I remember I turned bullish in China market around this time, and when it came here, other people were turning bullish, and I specifically mentioned that this was too late to take long trades. And I remember also that right on this day I mentioned that we could take short trades. I think that was one of the videos that I made, that this exactly on this day we could take short trades. In fact, if you look back 1 2 3 4 5, so this was previous weekend roundup. Right on that day I mentioned that I was going to take short trades. And all those short trades taken in individual stocks, weak fundamental stocks, weak industries would have given much more profit than the risk taken in the trades, and you could exit at least partial profit. Once again, I announced that right on this day I was bearish on China market when other people were turning bullish. And once again, my analysis worked out. What it means in trading terminology, works out means they turned to be profitable, turned out to be profitable. Now, am I going to take short trades? No. It has already dropped significantly from the point where I initiated my short trades. Now, stop would be far away. I'm not going to short now. Am I going to buy now? Of course not, because the weekly is looking very bearish in shape color, and daily is also looking very bearish in shape color. Once you look back now, you can see how accurately Q systems helped me decide the bullish posture, and once again at the very top switch from bullish to bearish posture well ahead of others. Now other people may be looking at the chart and say, oh, now it's time to be bearish on Chinese market, but I am already 1 week ahead of them. And this being ahead of them is a repeating aspect of my analysis, and you will see that in the USA market also. So China market bearish, Australia, Japan indecisive. What about India's Nifty 50? Here I am now bullish. The backdrop color in the weekly is bullish this week, so the shape is indecisive. The color is bullish, and in daily Nifty 50 is nicely going up with higher low, higher high, has trend line support nearby. Friday price closed with a bullish shape but not bullish color candle. Looking at this weekly daily chart, I think you can find bullish trades, probably trend following flow trades in the Indian market with strong fundamental stocks in strong industries. In the Indian market, I am now bullish. And lastly, UK's FTSE index. Well, this is right inside the triangle in daily, and weekly is also indecisive. If it can break out of the triangle pattern to the upside, I'll turn bullish. If it turns down now from this trend line resistance, I will not be bearish because there is a trend line support nearby. So I'm not going to turn bearish on UK market easily. On the upside, I'll turn bullish if I see next week, maybe Monday, price breaks out of the trend line resistance. Right now, indecisive. So we saw India market bullish, China market bearish, but not the time to short now. I would have shorted 1 week ago, but it's bearish China market. And the other three global markets are indecisive. what does it tell of the overall global market? That should be indecisive. This is the global index in market breadth. This is also indecisive. Successive candles, 1, 2, 3, in fact 4 candles. It's not going anywhere, has upper tail as well as lower tail. Red traffic light color. I will not turn bearish easily because even if price comes down, it may close not far from the watermark support. On the other hand, if it can break out of this nearby trendline resistance, I will turn bullish. Overall though, the global market is not bullish right now. Overall, it is indecisive. Also notice one thing, earlier in this area, though global index was coming down, relative performance was going up, showing that it was coming down less than the USA market. It was outperforming USA market. That has changed now. Now it is moving sideways, the relative performance line, showing that it is equal performing, neither underperforming nor outperforming the USA market. So global market's relative strength has decreased. What about the USA market? And I think in this weekend's market roundup or equivalent videos, many other analysts will start to turn bullish. But I have turned bullish 2 weeks ago. I look at the chart, but before that, let's look at the very powerful sector industry stock advanced decline breadth from 1 month to 1 day. The last column is for real time market hours. Now market is closed, so the last column and the second column are the same 1 day. Let's look at 1 month to 1 day picture. What do we see? 1 month is long term. If we look at the red and green color balance for the 1 month, we have to say it is neutral, neither bullish nor bearish. That is long term. 10 days, 10 days and 5 days both are medium term. Out of that, 10 days is clearly bullish, 5 days clearly bearish. And 1 and 2 day periods are short term, they are clearly bullish. So what does it show in terms of, if we had to think of it as a chart pattern, it would be long term bullish, bullish again over 10-day period, 5 days weak. So market was going up and then over 5-day period it had a dip, and then last 2 days were strongly bullish again. Now if you look at the website posts or Twitter posts all before knowing the results, I have turned bullish from 2 weeks ago. All the posts since this time 2 weeks ago are long side. And you notice one thing interesting, though 5-day period is bearish, overall breadth is bearish, so market did come down somewhat, but my bullish stance did not change all along from 10 days to 5 days to 2 days to 1 day. All along I am sharing only bullish ideas. I did not share any bearish idea during these 5-day periods. That's interesting, isn't it? And those trades are working out pretty well. You may check yourself. And this is not about one trade or 1 week's trade. It's about the technique behind the trades. And the technique is exactly what I am looking at now. The systems are exactly what I use in these webinars. Together they paint a very clear picture of what to do. It tells whether the market is bearish or bullish, but much more importantly than that, of course, it's very important to know market is bullish or bearish, uptrending or downtrending, but much more important to know than that for swing trading is what is my preferred trading direction. And the overall market may still be in a downtrend, since last 10 days I have shared a lot of bullish trades and I have taken plenty more and they are working out quite well. Now, if you see last 2 days breadth, I think many people will start to turn bullish now. Good for them, but my positions are already in sizable profit in percentage terms, and I have closed a number of trades as well. At least partial profit. I am holding probably partial position. You may look at the ideas I shared. I may go through some of them. The rest are always on Twitter and my website. Now, having said that, let's look at the USA market ETFs. S&P 500 ETF, SPY. Is it in a downtrend? Yes, very clear. No doubt about that. It's in a downtrend. It has only trendline resistance, multiple of them, three of them nearby, one somewhat far away, but three of them nearby. Of course, it is in a downtrend. If we look at a shorter term, we may see it is consolidating sideways. So if we just look at the market, we will say maybe it's not a good time to buy, but it is a good time to buy if we know how to find the stocks as I shared. Is there some bullish signal here? Yes, near the bottom we had a bullish headwind and bull release in weekly. We had a bullish headwind in daily, and price is very close to recover that watermark support level. However, there are too many trendline resistances, so I am not going to take any long trade in SPY. Am I going to take short trade? No. If you look at the weekly candle, it is very bullish shape candle, bullish color. Again, weekly also has a trend line resistance. So I'm not going to turn bullish unless this weekly resistance is broken and the daily trend line resistances are broken. That is at SPY level. But individual stocks have beautiful setups, not only now, from last 10 days. What about the other market ETFs? IWM. Small cap ETF. Is it in a downtrend? Weekly is very clearly in a downtrend. Daily, again, consolidating sideways for a shorter term period. There are too many trendline resistances nearby to take a long trend. Once again, we had bullish headwind in the weekly chart near the very bottom. But I will not turn bullish on IWM itself unless these trendline resistances are broken. Dia, this is looking relatively better, and I actually intentionally opened the ETFs in this particular order. Therefore, you may guess how QQQ will look like in terms of my analysis. But let's look at DIA first. It's looking better because weekly cleared the trend line resistance, and daily very close to breach the trend line resistance. So on Monday, if it goes up, we'll have probably many industrial stocks to scout for buy setups. And also notice here the relative performance line is gradually tilting up. It is outperforming the market, though it was also and still in a downtrend, overall downtrend. You can see clearly in the weekly chart, but it is overall outperforming the market. We may look for industrial stocks breaking out next week. And let me divert a little bit to a stock I shared earlier. And I remember when I shared that stock, I mentioned that I was not going to buy industrial stocks. When was it? It was actually in the last market roundup when DIA closed right below trendline resistance in weekly. So I suggested I am not going to be bullish on DIA. That in fact was a good idea. However, I did mention a stock MMM, 3M. Let's look at that stock also. It is in a downtrend. This is for the first week that backdrop color changed to bullish after this sharp drop, has a bull release and bullish indecision at the bottom. Price is at extreme low even in weekly chart. In the daily, it has series of bullish indecision at the bottom, and I remember in the previous market roundup I explained how I found this stock running the scan, bullish indecisions at the bottom, and then seeing if there is some possible buying candidate, and I told MMM could be one of them. If you were strongly bullish on the stock, you could consider shorting the put. If you did that, it has moved sideways for 1 week, so your short put trade is in a small profit. How is it looking now? Weekly color turned bullish and daily color is bullish also. We have a tick, so it has a bullish flow. Friday's candle shape is also bullish. All we need is to break out of this trend line resistance now. Why I came to MMM is that I showed in Dia weekly has already cleared the trendline resistance and daily is about to clear the trendline resistance, and if daily clears the trendline resistance in Dia, most likely MMM will also break out. Most likely, but not guaranteed. Most likely MMM will also break out, and if it has a gap up and breakout together, that may give a very low risk long opportunity using the gap long trading technique. You may check out its fundamentals. MMM is a well-known, 3M is a very well-known company and it is at an attractive price level. Lastly, QQQ. This is bullish, and interestingly QQQ daily chart is looking very similar to the pattern we saw in India market. This is a pattern we can trade. In fact, if you apply the Q trade setups, QQQ has one trend following flow long setup on Friday at the close. So you could buy, or I could buy confidently at the close on Friday. Weekly and daily both are meeting the checklist conditions. Interestingly, weekly displayed the bullish headwinds at the bottom. Daily displayed multiple bullish headwinds, created a false downside breakout after going up, pulled back, created a false downside breakout, recovered above that watermark support. Now price is above that watermark support and giving a trend following long trade setup. So QQQ is clearly bullish, and if QQQ bullish, instead of buying QQQ, you could look at NDX constituents and look for buy setups. What is the conclusion from the market ETFs? That we don't buy blindly in this market. It is not strongly bullish. However, QQQ is bullish. Technology large cap stocks we can focus on, and Dow Jones Industrials probably will give a breakout tomorrow, not tomorrow, Monday, and therefore we may look for industrial stocks buy setups also. What about the market internals? Firstly, let's look at mega caps. We saw QQQ is bullish. That is large cap technology stocks. What about mega cap tech stocks? Now let's look back again. Last market recap, I was here and I clearly mentioned that this was a very bearish week followed by very bullish week, then again a significantly bearish week followed by a significantly bullish week. Bearish, bullish, bearish, bullish. And I remember in the last market up I mentioned that looking at that flip-flop pattern, I was not going to buy mega caps. It was in a wise range, and at the top of the range I was not going to buy. And look now, this was my last market roundup, this very top candle. Wasn't it beautiful? And in trading terminology, beautiful has to be translated to profitable. The day I mentioned that I was not going to buy mega caps, though I know many other people were turning bullish now. It's actually the same thing that happened in China market. Many people were turning bullish. I turned bearish. In mega caps, I didn't turn bearish, but I said I was not going to buy, and they came down. Am I going to buy as of Friday's close? No. Friday's candle shape is very indecisive. Weekly is also indecisive in shape. So I'm not going to buy mega caps. Why I came here is that most of the mega caps are tech stocks. I'm not going to buy them, but I am favoring QQQ. That means I am favoring large cap stocks, but not mega cap stocks. And tech stocks, of course, QQQ has large cap tech stocks, but not mega caps. Does it mean I cannot find any mega cap to buy? I'll not say that, but probability is not on the side of trading mega caps right now. Relatively speaking, large caps, tech stocks are going to do better. Now, that also ties up with what I showed in the last market roundup in terms of Nasdaq and NYSE market breadth. Very powerful internal health check. Nasdaq NYSE as a whole, I showed, and I'm still continuing with the same view, looking at the yellow line, percentage of stocks above 50-day moving average on the left hand side. Nasdaq is much more bullish than NYSE now. NYSE is bullish, it is at around 28% level, but Nasdaq is 42% level. That's a much stronger market to trade. So Nasdaq stocks now are much stronger, relatively speaking, than NYSE. If we look at percentage of stocks above 50-day moving average, that ties with the fact that QQQ is doing better than the other market ETFs. Now let's look at the powerful market breadth total view. Let's look back again. It's very useful to look back to gain confidence on the analysis, so that next time when the signals come, you don't second guess. You just keep on trading based on what the system is telling you and me. On this day, I think that was Thursday. 1, 2, 3, 4, 5. Yes, Thursday. We had one Eureka day. And this day at the close, Friday, after Friday's close, I had the market roundup, and I mentioned very clearly in that market roundup that just because we had little bit down move in this market breadth total view and in several market ETFs, I was not going to turn bearish the very next day after Eureka day. Eureka, this color, cyan color shows very strong bullish momentum, and we had one accumulation count of 1 also. So I mentioned very clearly on this Friday that I was not going to turn bearish. And I showed earlier when analyzing sector industry stock advance decline that market did pull back somewhat over last 5 days. Or some days, and Thursday, Friday it recovered somewhat. Overall, the week might have closed little bit down, but I did not turn bearish. I didn't share a single short idea on these 3 days that price came down Monday, Tuesday, Wednesday, all along from here, all along from here. I am continuing to share only long ideas. How is Friday? Beautifully bullish. It has a Eureka day, and to me, more significant than that, we have a large accumulation count of 4. That is very broad and deep bullish breadth day. And when did I turn bullish on the market? Here. Why? Because at that time itself I showed the bullish divergence in advanced decline, up down volume, and of course in new high low percentage. The yellow line was also starting to go up, the percentage of stocks above 50 MA for market with total view. So all those helped me to turn bullish here and continue to remain bullish, and I have made a number of trades. I have booked profit in some of them. All are doing well. Well, let me say most of them are doing well enough to make a considerable profit in terms of percentage profit in those trades. So my market view is bullish. Internal view very clearly bullish. External view, I'm preferring certain kind of stocks, large cap technology stocks. There may be mid cap stocks also. Technology stocks in general preferred, large cap tech stocks also preferred. Now let's go back to Q Edge where I showed the sector industry stock advanced decline breadth. That is now clearly bullish over last 2 days. That is a reason to start buying and for me to continue buying. On Friday also I bought some stocks. If I have time, I may look at some of them. Some I shared, some I might not have shared publicly before, but we look at them. But before that, let's complete the market level analysis. Look at the market from another angle, sector performance, 1 day and 2 day periods. 11 sectors are up, and see the percentage gain of all the sectors, very large percentage gains. For many days, we have not seen such large percentage gains on 1 and 2 day periods. 5 day period bearish, 10-day bullish, monthly period is, we can say, neutral. The top picture is telling us clearly to be bullish. And I know, I'm quite sure many people will be starting to be bullish now, though I showed that the market ETFs are telling to be cautious. There are memory resistances, trend line resistance, many market ETFs, but at sector level and therefore at industry stock level, you will be able to find stocks that are giving low risk buy setups, at least if you are using Q techniques and Q trade setups. Now, is the market overbought? No. I showed this distribution of stocks across buckets for S&P 1500 in the last market recap. It was very nicely distributed, even better than this week. It had a more natural distribution, but this is also quite bell-shaped distribution. It's neither overbought, in which case the percentage of stocks in the uppermost bucket would hit 30-40% level, nor oversold. It's at only 3.7% at the uppermost bucket, only 1.1% at the lowermost bucket. Quite nice, close to normal distribution. Is it bullish? Yes. 61% of stocks are above mid-Bollinger Band. That is clearly bullish. What was it 1 day earlier? Only 37%. So from 37% to 61% is a huge jump. Whenever this jump is more than 10%, it is very bullish. This is far above 10% jump. So many stocks moved above mid-Bollinger Band. That is bullish. So from many angles we see bullishness from total view, internal breadth, and from some of the market ETFs, not all market ETFs. Sector industry stock advanced decline clearly shows bullishness. Lastly, let's look at technical breadth. Let's look at the weekly picture first. Weekly picture is mixed. We can say, if we are very mathematical, we say it is bearish. We may also say it is mixed. All signals, reversal signals also mixed. Strength very bearish, trend continuation mixed. Overall, it is slightly bearish than bullish. However, Friday's picture is very bullish. 98, 98, 98, 96% bullish. Very bullish across the board. If the market was not so down, I would start to consider that these percentages to be overbought, but the market was down, still in a downtrend in weekly interval for all the market ETFs. So this is not a overbought condition, rather it is a bullish thrust at the bottom. And such bullish thrust, whether we look at sector industry stock breadth over 1 and 2 day periods, whether we look at this technical breadth on Friday, or whether we look at the 4 accumulation count on Friday, they don't happen at the market bottom because retail traders are buying. They happen because big players have bought. What will they do next week? I don't know. But all I know, there are plenty of low risk buy setups. And so long they are low risk setups, I am confident in taking them. And of course, I align the technicals with industry fundamental and market view. Market view is now bullish, but in selective areas. Now let's look at some of the ideas I shared during the week, and you will see how I am applying the Q systems on live market, because my sharing are all before knowing the result. Let's start with the last tweet. Oh, by the way, I was going for bicycling. I live near the village, not near the village, in the village nowadays, and I love the vast expanse without anything blocking the view, so I posted it on Twitter. But let's look at the last stock analysis I shared, and here on Twitter I did not share the ticker of this stock, but I shared it in the graduates club. Let's look at the ticker. When am I sharing it? I'm sharing it in the morning session on Friday. And if I posted on Twitter at 10:37 a.m., you would know that if I wanted to trade, I would have placed the trade first. And that was probably not the only trade I was managing or placing. So I took some time to place my trades, then I took some time to make the snapshot, annotate it, post it. So if I took the trade, I would have traded it sometime before that, so in the morning session. And if you are using Q systems, you could do the same thing. When could you buy then? You could buy when it was breaking above the second trend line resistance. When did it break the first trend line resistance? Right at the open. And open had a huge gap up, so it had a gap up possible long trade setup, and also a breakout long trade setup right at the open. You could wait a little bit for the price to go above the second trend line resistance using intraday chart. You could take a precise entry. And this is how the chart looked like at 10:37. What was the price then? 48.54. What were the bullish signals? Let's look at all the marked signals. Okay, what is the ticker? I'll show the ticker. I shared it already in Graduates Club, but I'll show the ticker later. Let's look at the charts, because whatever be the ticker, I was telling some other traders today, I had a private session with few traders. I explained, if I get this pattern and the stock is fundamentally strong, industry is strong, I'll trade it, whatever be the ticker. So the ticker is not so important when you are learning the technique or learning to confidently apply the system and technique. What did we see? What did I see when I shared it? Weekly, very bullish backdrop, bullish shape, all unambiguous signals. The U in Q is unambiguous. Everything is unambiguous. Color, shape, bullish. This band indicator is showing that it had a weekly bullish reversal. Number 3. Number 4, it was near jump thrust low here itself. That was very oversold condition when it was also at price extreme low. So we could expect a recovery. What happened after that? Right here we had a big move up 3. I keep on mentioning, a big move up 3 comes at jump thrust low, or near jump thrust low in this case, at price extreme low. This buying was not because of retail traders, and price went up enough to give us a profitable swing trade if we traded that with proper techniques. Then it pulled back as it often does, retested the watermark, and right on the day I shared it, that is this Friday, it had a very beautiful breakout. In the morning session itself, it also had big move up 3, it had bullish pressure, it was still at price extreme low, a lucrative buy point, and it was coming out of squeeze. Weekly, daily, as I mentioned. Every time I have a chart looking like this, whatever be the ticker, I look at the industry fundamental also, but technically these charts I will always buy. What was this stock? This was Citibank. And see the price here, 48.54 when I shared it. When it broke above the trend line resistance, the second one, it was below that. Let's look at Citibank, how it closed. It closed at 49.98, almost 50. Where was the trend line resistance? Second one, that was 47.50. So since the time it broke the trend line resistance, it went up and closed $2.50 higher. Everything is looking very bullish. I actually traded it when I shared the idea, posted it on Twitter. Before that, I shorted the put. In this case, I shorted naked put. I was okay to hold the stock if I got assigned. And in this case, because it was going up with breakout gap long setup right after earnings, I expected the volatility to be very high. So I didn't want to trade short put vertical where the long leg would have nullified the volatility advantage of the short leg. So I just traded short put vertical, and also I was expecting it to go up for a couple of days, maybe one day, maybe 2-3 days. I wanted to book profit. So I didn't trade 45 days to expiry. I traded about 10-11 days to expiry, and as of Friday's close, my short put is at 60% profit. Normally I place a profit booking order for naked short puts at 50% of max profit, but in this case it was looking bullish enough for me to, I actually placed the order to book profit at 50%, but I cancelled it and changed it to 80% of max profit. That was looking at the technical strength on weekly, daily, the fact that it solidly broke above all the trend line resistances and also the yellow direction line with bullish flow, big move up 3, bullish pressure, extreme high volume. And if I now look at the fundamentals and industry strength, you will see how confidently I could analyze and take the trade without worrying about what other people were saying or what was the news on possible recession. I had a low risk buy setup and I took it. Let's look at the industry while Vital is gathering data from Icon. Diversified banks, that is the industry of Citibank. What is the industry score? Just looking at the color is enough, but to make a point, I want to point out that Friday's score for the industry is 149 out of how many industries we have in the USA market in QH? 149. So this was not among top 20%. Yes, it was among top 20%. That is good enough. It was the very best industry on Friday. How was it earlier? Pretty weak. So it is rapidly gaining strength. This is a turnaround industry. Citibank is a manifest of that. How much did the industry go up on Friday? By percentage terms, more than 7%. That's a huge move. Huge move, but it is turning around. So it's certainly not overbought. Citibank chart certainly doesn't look overbought. So I could confidently buy, and I also could use all these insights to not book profit at 50% in this case, 50% of max profit. How is the fundamentals? Undervalued stock, not high growth, that is expected. High growth stocks tend to be at a higher price level until they fall down. But this is a value stock and I am allowed to buy value stocks. Does it pay dividend? Yes, a decent dividend of 4%. Of course, it makes money, and see the in itself strength of the industry. 98% of PR stocks of Citibank went up on Friday. That's a very strong industry. When I looked at all this and I could look at them in real time, I decided not to book profit at 50% of max profit for my naked put short position. So that's how I traded Citibank, and notice how confidently I shared the idea once again before knowing the result. That was Citibank. Let's scroll down. This dia trade will be a lot of fun also to look at. This trade would have been taken using intraday charts. Notice again the timeline when I am sharing it. July 14th. July 14th is which day? Thursday. So I am sharing it when? Thursday 10 a.m. Now it took me some time to capture the snapshot, annotate it, and if I had to place some trade, I would have placed before doing all this snapping and tweeting, right? So if I traded dia, I would have placed the trade before 10 a.m. itself, or maybe around 10 a.m. Let me say, because I see 10:04 a.m. So around 10 a.m. I would have placed the trade. How is dia looking like in this chart? Very interesting, isn't it? On that day, dia actually opened with a huge gap down. And this is Dow Jones Industrial CTF dia daily interval. It opened with a huge gap down. This is Thursday, right near the open, not at the close, near the open at 10 a.m. Looking at this, who will consider buying? Not many people, right? But what I saw and what I shared, okay, let's go back again. That price was steadily coming down for few days, and it was significantly below this line. That was the weekly expected move that is calculated in Q Elite Trade Station, Q Elite add-on based on options pricing. So it was hugely below the lower expected move. What I mentioned in the tweet, if you notice, that it is not bullish, of course, it had a huge gap down, but it is too late to short, and it is far below lower expected move. And if you keep on watching the market ETFs, different thing for individual stocks. Market ETFs, different things. Market ETFs tend to recover at least somewhat if they are so far below expected move on Thursday near the morning. It's a huge gap down move. So what would be a preferred trading direction in this case? Not short, as I mentioned. It's too late to short. There is no second thought about that. It's already too late to short, far below lower expected move. But looking at the gap down, you could see if intraday time frame had a long trade setup, and I followed up with a post later. Remember the time 10:04 I posted the first analysis, and this is a 10-minute chart. That was a daily chart, 10-minute chart using Q pivot template of same instrument dia. My first post was right on this candle, red candle. In fact, the last red candle in this chart in the morning session. After that, it displayed two bullish indecision in a row. However, if you notice, you may not be able to see very clearly. Let me remove the drawings. I'll use arrows. Though we had though we had bullish indecision here, the candle shapes were not bullish, but that changed on this candle. It had a bull release and bullish shape candle. So if you were aware of the gap down move, huge gap down move, and the fact that it was well below weekly expected move, right at this point you could take a long position, placing stop below day's low. The stop was never hit, never approached in fact. It made a higher low here, price went up, and by this point your reward was about 2 times or more than the risk. So once again, you see an example using intraday time frame that I was not trading in the direction of the market. I used the Q different analysis to decide the preferred trading direction, which was not in the direction of the instrument DIA in this case. I took a contrarian trade once again with low risk, that is a constant in all my trades, and I would have booked at least partial profit at the close of Thursday. This is, we are talking about Thursday. What happened on Friday? If you booked full profit, that's fine. If you took options trade, for example, at this point, let's say call options, you could book a number of lots profit at this point and hold a number, few maybe. How many you would hold? Probably I would suggest only those that are already free by the profit taken in the closed lots. So that way, even if a gap down a lot on Friday, you would have a totally risk-free trade. So if you used call options at this point, you could book partial profit to make the remaining call options practically free for you. Or you could book full profit, of course. That option is always there. Reward would have been much higher than the risk taken in the trade. That's an underlying principle of the Q trading philosophy, that we always take trades where reward is on average higher than the risk. If you held partial position, how did DIA act on Friday? Let's look at that. DIA, let's look at the intraday chart. Same pivot chart, 10-minute interval. Remember, I first mentioned that it's too late to short and well below lower expected move right on this point. And you could apply the Q techniques to buy right at the close of this candle. Stop would be here. You could book at least, I would always book at least partial profit at the close on Thursday. So much profit that the entire trade is risk-free from then onwards, and see what happened on Friday. Because I made sure it was a risk-free trade, Friday happened to gap up, I wouldn't know beforehand, and partial profit already booked at 2:1 or more reward risk ratio, remaining position profit much more. And you wouldn't probably book full profit on Friday also. We looked at DIA chart earlier using weekly, daily, and I mentioned it is possible it will break to the upside on Monday or next week. So we had again a very low risk trade initiated using 5 or 10-minute interval, and now we have been able to change it to a swing trade, at least partial position, and my profit or your profit now is on the daily time frame, but our stop was on the intraday 10-minute or 5-minute time frame. So that gives huge reward risk ratio, and we can implement these trades using the precision entry pivot intraday chart. What is so, I think, somewhat different, maybe a lot different from what other people share, is that I am sharing these analysis always before knowing the result. That means I must have confidence on the systems and techniques. I wouldn't like to make a fool of myself by sharing publicly for days after days, weeks after weeks, months after months, and years after years. DIA also worked out beautifully. There are several trades that I shared like that, but let me close with one stock probably that I didn't share publicly yet. I think I didn't share. Let's look at the stock first. I didn't tweet about it. I didn't put it on my forum. PSX. Remember in the last market recap, the YouTube video is still there. I mentioned I'm starting to buy energy stocks, and PSX Phillips 66 is one. And look at the chart as of Friday's close. What immediately strikes the eyes is this very long term weekly trend line support coming from far, far away. We have two bullish indecision at the low, 2x in a row, two weekly candles with bullish shape. If you look at the weekly chart, where is the next likely move? My view is it is to the upside. What happened in daily? It came to this watermark support, very cleverly created false downside breakouts and went up on Friday. How did it go up? Notice carefully. Huge gap up open, bullish shape, bull release after a huge down move. If you combine the weekly daily, it is showing elements of both bounce and box setup. Probably not perfect box setup, not perfect bounce setup. However, if you combine weekly daily, because there are factors of both bounce box setup, you could consider taking the trade. Now, is that enough for me to take the trade? No. I looked at its fundamentals and industry strength. Let's look at that. PSX. Look up its industry first. Oil and gas refining and marketing. Just look at the shaded background, top 20% of all industries. The past 2 days shows base column show acceleration. Also showing acceleration is among top 20% of industries, and on Friday the industry went up by 3.77%, huge percentage up move. What about the stock? Industry is clearly bullish. Stock is fantastic in terms of Q scorecard. Undervalued stock with huge earnings growth, huge revenue growth, fund accumulation. Again, a very decent 4.7% dividend yield, makes money. 96% of PSX PR stocks went up on Friday. So in every way, it is looking very bullish. Fundamentals, industry strength and technicals, and the stop loss is not very far away. So I took a position in PSX, and in this case also, I decided to take it using naked short put. I already have some profit in the trade. If it goes up a little bit more, I will hit the 50% of max profit and I may consider closing the trade. This is only one trade I took on Friday. I might have taken few more, and totally I have many more trades taken in last 10 days when I turned bullish and when I publicly announced that I am only taking bullish trades. And you can see that from my Twitter page. You can also see that from the stock ideas I share publicly before knowing the result. All were bullish trades last 10 days, and I am continuing to remain bullish. Again, I would like to go back. Though I am bullish, QQQ is very clearly bullish. Back to Q Elite on Trade Station. QQQ is very clearly bullish weekly, daily, but the other market ETFs, SPY, IWM more particularly, have trendline resistances. DIA is about to break trendline resistance. So I am bullish, but I am selecting my stocks carefully. And there are plenty of stocks to be selected using Q techniques that are giving low risk buy setups and working out quite well. We are at 1 hour point. If you follow the videos for couple of weeks, you will see how they are building upon previous week's analysis and how they are working out. That will be a very good learning way for beginning traders. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Okay, I don't know if we are at 1 hour point, but that's fine. Sometimes I start the session at different hours, but that's fine. We had plenty of analysis this week. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. The public session will be next weekend, same market roundup. Have a great weekend, and as this live analysis show, there is no reason not to do that. Trade profitably. Thank you.